Welcome back to our deep dive. It's June 19th, 2025. We're digging into a whole stack of recent reports today. Our mission, as always, is to pull out the really key insights for you. We're looking at the latest economic, corporate, and geopolitical shifts.
Especially those that connect back to Malaysia in sometimes surprising ways. And I'm here to help unpack what really matters in all this information. We'll hit Malaysian news first, then connect outwards.
Okay, great. Let's dive in.
Mhm.
Starting here in Malaysia, some big corporate news. Public bank first. The federal court has ordered them to pay RM 90 million.
90 million, wow, to NFCorp, right, for a confidentiality breach. That's a major liability. Really underscores the importance of data security in banking.
Absolutely. It sets quite a precedent, doesn't it? You don't often see numbers that high for this kind of breach.
Yeah.
Then there's Pharmaniaga. They seem to be staging quite a comeback.
Yeah, it looks like it. They're targeting RM4 billion in revenue for FY 2025 and aiming to get out of PN17 status, the financial distress category, by early next year.
That's a pretty quick turnaround they're aiming for. How are they planning to do it?
Well, they mentioned launching 14 new products next year, and they have a pipeline of about 91 more over 5 years, plus maybe resuming dividends.
So an aggressive growth strategy then. Diversifying.
Exactly. Trying to
Oh.
regain that market confidence.
Okay, shifting to energy. Petronas has signed a new deal.
Right.
A 15-year LNG supply agreement with Woodside Energy out of Australia.
That's a long-term commitment. And they're also talking about maintaining discipline, right? Aiming for a US $50 per barrel break-even price, which is pretty crucial in today's, volatile energy markets. Shows financial resilience.
Right. And it seems Solja is still attracting interest. ConocoPhillips is apparently looking at new investments in Sabah.
Yeah, confirms Malaysia's strategic position in the global energy scene, both through Petronas's deals and incoming investment.
Okay, let's touch on aviation. AirAsia, they're talking about buying a lot of new planes.
Between 50 and 70 new Airbus jets, I think was the number mentioned.
But it sounds like that's not the immediate priority.
Correct. The main thing for them right now is finishing their financial restructuring, getting out of PN17 status.
So stability first, then think about expansion. Makes sense.
Especially after the tough few years the whole industry has had. Consolidation seems wise.
Moving to the wider Malaysian economy now. The government's expecting more revenue from the SST changes.
Yeah, about an extra RM5 billion between July and December they anticipate. It's part of shoring up the fiscal position.
And this fits into that discussion about a wealth tax, doesn't it?
Yeah.
Or rather, the lack of one.
Kind of. A full wealth tax is complex to implement, as people point out. So this 2% tax on high dividend income over RM 100,000, it's almost like a proxy. Easier to manage, still brings in revenue. And there's this broader call for focusing on structural transformation, not just chasing growth numbers.
Right, long-term benefits over short-term gains. We also saw huge foreign inflows into Malaysian bonds recently.
Yeah, biggest monthly inflow since 2014, apparently. About US $3.15 billion.
Why the sudden interest?
It seems to be part of a wider trend. Global investors looking at Asia, particularly Southeast Asia, for stability, stable markets, decent yields, maybe some currency appreciation potential, especially compared to, say, the US or Europe right now.
Interesting. And on the investment front, there's this story about a Chinese firm potentially using NVIDIA servers in Malaysia for AI training.
Media is looking into it. It highlights Malaysia's rise as a data center hub.
But it also brings in those tricky tech geopolitics, right? U.S.-China tensions over chips.
Exactly. Malaysia has to walk a fine line. Attract investment, yes, but also navigate things like export controls and concerns about technology ending up where it shouldn't, especially with the U.S. tightening rules on AI chips going to China.
Speaking of global factors, the U.S. Fed looks like they're holding interest rates steady for now.
Seems likely. They're juggling a cooling economy, but also inflation risks, partly maybe from U.S. import tariffs and, of course, the ongoing Middle East situation.
And those trade issues could ripple outwards, couldn't they? Nomura suggested the U.S. might even put higher tariffs on Southeast Asian countries.
Yeah, including Malaysia. The concern is China might be rerouting goods through the region to get around existing U.S. tariffs. It shows how these trade disputes can suddenly reshape supply chains and hit other economies.
And the sheer cost of AI development. Wow. Elon Musk's XAI reportedly burning through $1 billion a month.
$1 billion a month. It's just staggering. Really illustrates the kind of capital you need to compete at the cutting edge of AI.
Meanwhile, the TikTok saga continues. Trump extending the sale deadline again.
by another 90 days. Yeah, it just highlights that ongoing U.S.-China friction in the tech space. Digital sovereignty issues aren't going away.
And China itself is making moves in global finance, increasing quotas for domestic investors to invest overseas.
Right, the QDII quota, and pushing for a more multipolar currency system, promoting the digital yuan.
Signaling a potential shift away from just the US dollar being dominant.
That seems to be the long-term play. Building up the yuan's international role, creating more independence from Western financial systems.
Okay, let's bring it back home. Domestic governance and social issues in Malaysia. There's this reset program for healthcare financing.
Yes, trying to overhaul the system and tackle rising costs. It's a huge challenge. And tie into that are calls for other big structural reforms, like a universal pension scheme.
Because of the aging population and concerns about retirement saving.
Exactly. Big, politically sensitive issues. How do you prepare for those demographic shifts? How do you ensure people have enough in retirement without causing major economic disruption? It's a tough balancing act.
And on the governance front, the MECC seems active. Arrests in Sabah involving mining licenses.
Yeah, 2 individuals with Datuk titles arrested for alleged bribery. Plus, those high-profile cases involving Najib Razak and Anwar Ibrahim are still proceeding.
So, continued focus on anti-corruption efforts.
Which is vital, isn't it? For public trust, investor confidence, national integrity, it's signaled a commitment that affects everything.
Wow. Okay, that was quite the deep dive. We've covered a lot. From public banks' payout and Pharmaniaga's recovery, to Petronas' deals, global trade tensions, AI costs, and domestic reforms. It really shows how interconnected everything is, doesn't it?
It absolutely does. And it leaves us with a pretty big question, I think. With all these global shifts happening, geopolitical tensions, economic pressures, and then the domestic challenges like aging populations and reform needs, how can a country like Malaysia really proactively shape its own future? How can it build long-term stability and prosperity rather than just constantly reacting to these external forces?
That's a really powerful thought to end on. How to be proactive, not just reactive. Something for all of us to think about. Definitely gives us plenty to consider. Keep mulling that over, and be sure to join us for the next deep dive. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.